Bueno, no creo que lo vaya. Tú puedes presentarme la oferta si quieres, pero no creo que no. Tú sabes que el señor son una pareja de personas mayores.
Sorry, guys, we're gonna start in a second here. She's just opening up the in here. You have my email?
Okay, just this one?
Yep.
Okay, now it says, make sure I put the right one, this one?
Yeah, here go to meetings. Whatever.
Oh, I was clicking here. No, could be that one? No.
No, Tuesday.
Oh,
Here?
Here
Yep.
and here?
No, no.
I think we have to do this.
No, no, it was open.
Oh, okay, there it goes.
Open this up. Here. There you go. All right, she's joining now. All right, Isabel's joining us now, and you should be able to share your screen. To share your screen.
Hi, everyone. Can you hear me? Is this too loud? Let's see if I can go ahead and open up. You know? Oh. Is that me? It's an echo. Hello? No, still an echo. Can everyone hear me? And can everyone see the screen? Okay, hello? Can everyone hear me? can we tell?
Joe said yes.
Okay, perfect. That's good. All right, so wanted to try to have as many of these little short powwow meetings on Tuesdays, just to give you a little bit of refresher on different things that either are coming up or that we have new or returned. It gives us a heads up in the market to be ahead in conversations in the market with customers, other realtors, etc. So last year with the COVID, we had several programs that were held back and were, I wouldn't say discontinued, but were taken off the market for a while. We just got these back starting yesterday, which is huge. We did some of these here in this office. That's why I wanted to have the opportunity to get to show you these back. These are the 3 that came back. And within one of these, we can also do condos that are not warranted. So let me just give you a little briefing. I'll email this to you so you can just have a little bit of a checklist or a little bit of referring back to item. I think one of the most popular ones, which I'm going to start with, is the one in the middle. If you take a look at the one in the middle, it says self-source. The self-source is the one that's super popular, which is no tax returns. Self-employed individuals with no tax returns. So what happens is that in this case, and again, we did several when I started here, we did several the year before last. And it was not really a hard program. It's processed and closed by us. We don't broker it out. That's huge. Some lenders broker out their loans. These type of programs can take like 60 days. We underwrite them, process them, close them. So the Smart Self is the one for self-employed employees. And that one is for bank statement program only. We do not need tax returns. We only need 12 months bank statement, can be business and can be personal, or can be both. Let's say a customer has business, and what we do is I add up the deposits that on that bank statement, and I complete the total of 12 months, and that will give me what their income is. Some of these owners have bank statements which are very healthy, 10,000 a month, 12 of deposits or more. And a customer that had like $250,000 in the year in deposits, and we use that as her income versus her tax returns that had like 40. So for all the expenses they take off. So the self is really good. You will hear sometimes that people might say we need 24 months. We don't, because we do and we don't. We do if you want to get even a lower rate, or you need even more income and we need to take it back 24 months. But I have found that in many occasions with 12 months, making it easier, more seamless to your customer has been very positive and has been enough income to qualify them. So we're looking at Smart Self, 12-month bank statements, no tax returns at all. You can always send all those to me. I can add them up and tell you, look, this customer will have $100,000 worth of deposits, and we can use that as the income. This program goes up to 3 million. This program goes up to 90% purchase loans, and it has no mortgage insurance. That's huge as well. It is 10%. It is in your traditional 5, but you are also dealing with customers that don't provide tax returns. So there is some overlays or some guidelines. So 90% purchase. The RT means rate and term. So that doesn't apply to you, but just so you know what that means. No MI. If a customer wants to like cash out or refi just to pull it to a new home, the CO means cash out. Again, I would go up to 80 using their bank statements and no PMI. The back ratios are 50, which are great. Your conforming loans typically are 45. We're going up to 50%. Bank pay stubs are optional. Only what this means when you have a self-employed borrower that is only going to use bank statement. Sometimes I have a wife that wants to go on the loan and she works and she has her regular job. So for him, we would use bank statements for 1 year no tax returns. And for her, we would use the pay stubs in her W-2 should we have and want more additional income for that file. We do a 4506 transcript, but it doesn't affect the fact that we're not going to use tax returns. It's just for our file. We don't worrying about anything that really says. We just have it for the file. If there's derogatory credit, we can do, if it's 4 years ago, we're good. We get the current market for this program, which I'm going to tell you right now, more or less. I just priced one yesterday, and I was able to get that customer $128,000 in income for bank statements. She's been waiting for me for like 3 months or 4 months, and she's trying to purchase, and she just didn't want to do tax returns with a deep expense that she had to return to IRS on cost. So she waited, and her income is 128. And I priced that one, especially because I had the training today. This program just started yesterday. This particular one, the derogatory credit, if let's say the customer has 2 years instead of 4, we can still do it. We just price the loan a little bit more aggressive if they have less years. When I look at the credit report and it has 2 years derogatory, since they've had issues, and that could be late payment. And you can say it right here, 1 times 30 late payments, or if they have anything else on the credit, like a foreclosure or bankruptcy, bring those to me because those will fall in the Smart Edge program. And we'll go over that in a minute. We've got cash out can go up to 500,000. You know, your conforming loans or your jumbos, max cash out is only 250,000. So if you're a customer that needs cash out, doesn't have issues with self-employed, they could be W-2s, but they might need to cash out $300,000 to purchase another home cash, I can put them on the Smart Edge with their regular W-2s and pay stubs, just because of the cash out. That's what we would do in that particular customer. These don't require the reserves. You can't use cash for reserves. Then you've got your minimum credit scores are not huge. Despite the fact that there's no tax returns, the credit scores are 660 on the bank statement program. They can finance up to 15 properties. It's a 30-year term. And the other great thing is that we can do 30-year interest only on any of these 3 programs. So some customers want to have a very low payment, or they're going to sell this home in 5 years or flip it, whatever it is. They might not want principal and interest. They might just want interest only. And we have those, and I'll show you what that looks like. And there is no prepayment penalty on the Self Smart. Any questions on the Self Smart? You see anybody asking? No question. Okay. So the other one that's super popular here is your Smart Edge. The Smart Edge is for those customers that have traditionally have either a condo that's not warranted, or we don't have reserves, or you have the customer who has issues with credit events. Let's say they have a bankruptcy and it's not the 4 years that we require for conventional, and they only have it 2 years or a little bit less, 12 months. We can do the Smart Edge with a customer that has difficulty on credit. The a loan amount could go up to 3 million. The 90% purchase, no MI. So you still have a customer who had a bankruptcy a year ago. You can go 90%. You still won't have PMI, and you can do the loan. You can go 50% back ratio. Again, if you have a co-signer tomorrow that has information in this particular one, remember, it's not bank statements. The Smart Edge is a full doc loan, but it's a loan that has issues with credit, and therefore we can be able to use this this loan. Welcome. It will require tax returns as well. Again, the Smart Edge is with tax returns, but it's more geared to the customer who has either issues with credit, like foreclosures that don't have the 7 years. Maybe they have 4 years in a foreclosure. That's a huge program. I do a lot of these in this market. So, and here's a little bit of feedback. The derogatory could be 4 years. If it's less than 2, it could be a year, less than 2, we can do it, just the rate will be a little bit higher. Here's your standard mortgage history, but if they do have the bankruptcy or the foreclosure, it's less than the term of the season on a conforming, we will still do it on this program. We have the cash out still goes up to 500. So isn't that cool? You have a customer who had a foreclosure 2 years ago and hasn't really reached the 4-year season. You put them on this program and we can do a cash out up to 85% and give them up to 500,000. So yes, we will require reserves. Could be a 401k, could be a savings. The reserves are typically 3 months. If they have 6 months reserve, that also helps their interest rate. The credit score is 660. And they can finance up to 15 properties. There is no prepayment penalty on this one either. So before I hit the last one, which is also a popular one, the Self-Smart, the customer I was just mentioning that I worked with her yesterday. I got her bank statement. She has 128,000, and we're going to be doing that loan. She doesn't want to go deep on that tax return to have to return money. She doesn't want to have to, pay back the IRS. And she's going to go with the bank statement program. Her loan is $480,000. We're doing this program. The interest rate that I gave her on this one, which I priced it yesterday, is 5.25. 5.25 fixed rate for 30 years. So it won't be your traditional 3.25, 3.5. The lady would prefer to take a 5.25, which is a little bit more in the mortgage payment, get the loan done, go up to 90%, have no MI, instead of paying IRS, I don't know, maybe $15,000 to be able to hire her income enough to be able to do a regular loan. So that's where the Smart Self bank statement program for 12 months. If they give us 24 months, we might be able to go to 5 or 4.875. So that was why you can have 12 months or 24. You'll hear some companies say, well, we needed 24. You don't need 24. You can use 24 for a better rate, or because you need to maybe go back 2 years to try and see if the year prior to the year that you have has a better, deposit. Like in this case, we just left COVID, and 2020 for some people's on bank statement, maybe wasn't as healthy as 2019. So if we can get 24 months, that customer can go Smart Self, no tax returns, 90%, no MI, get a 5.25 interest rate, go up to 50% back ratio, and be able to do this loan. So the last one that I wanted to just touch base is, any questions so far? All right. So the last one I wanted to touch base is your Smart Vest. This Smart Vest is for your borrower who is an investor that owns already real estate or has owned real estate, even if they sold it and don't have any additional real estate other than their home. And we don't need tax returns. We don't need bank statements. All on this one, all we do is use the lease and what that house is going to rent for as the income to qualify them. So let me repeat that. We don't need tax returns at all. We don't need bank statements other than just to prove they have funds for the down payment, obviously 2 months, but we don't need the whole year. We don't need tax returns. This is a customer who comes to us and has the credit score, 640 or more, has other property that has experience with an investment, and comes to me and says, you know what, I need to get, and I want to buy this other home. I don't want to use tax returns. I don't want to use bank statements, but I own another home. I am an experienced landlord, and I want to purchase this home with 20% down. The property is worth $400,000. The property is going to rent for $3,000, and my mortgage is $2,000. Then that property has a rental that is much more than what the mortgage will be. We do that loan that easy. Credit report, the lease on that property, photo ID, 2 months bank statements, just to see they have the 20%, we're done. So that's It's so easy.
Too good to be true.
Huh?
Too good to be true.
Exactly. It's so easy and so simple.
2006 all over again.
Yeah, it's so easy and so simple that it's kind of airy, but it does exist. I did 2 of those. I closed them in late 2019. And those are some customers that,
So no income, I don't have to show any income.
no tax returns, no income.
So how can
I just need to know, what we do is the property that they purchase, we'll do an appraisal that will have a real estate analysis so we can see what it can rent for. And as long as the mortgage is 75, let's say the rent is 3,000, we only give 75% of 3,000. So whatever 75% of 3,000 is, if that's more or enough to cover the mortgage, we're done. We're good. That's all we need. So it's super easy. It's super simple. So this one goes up to 80% on a purchase. So you gotta have a customer purchasing a property. They have other investment properties. I know Darush has a customer that owns like 8 or 10 properties. I've done like 2. And he's a great candidate that if he wants to buy another property, I don't need his tax returns. I don't need to qualify moving forward because the program is back. So I can actually just get the lease and find out what the rental analysis to confirm that he can rent for that amount, pull credit, get assets, and we're done. That customer.
Used for refinance, let's say that there is an equity on the property, but not the cash in the bank.
Yeah, you can do, if you look at up here, we can do 80% refinance on rate and term or 75 cash out with the same concept.
And how did you get a lease if you didn't buy the house yet? I don't get that part.
Well, what normally happens is we first do the escrow analysis so that we can see, the appraiser does an inspection. When he does a regular appraisal, he does a rental analysis for us and tells us, and that's how we first underwrite the file and approve it. We go by what the customer and the realtor tells us, look, this is gonna rent for 3,000. And then what they'll do is at the end, when the customer closes, it depends on the customer, but normally they'll ask for a proposed lease. It won't be a signed lease because he's gonna rent, doesn't have the buyer yet, but they'll ask for a lease to make sure that we have a lease set up and at least put it in the body of the file. But what we prove and confirm that the rent is there is that we do on real estates that are investment. We do it anyway on all loans. That's what we're going to use, especially in this particular loan. We're going to use the rental analysis that the appraiser will tell us based on the area, based on the market, this property can rent for $3,000. We'll do 75%. And if my loan is under that, then we can do the mortgage.
What documents do you need to show that he's an experienced real estate?
We're gonna pull credit, so we're gonna see if there's mortgages. If there's no mortgage, normally we have what we call a drive-by, which is a form that we use to see all the properties a customer owns, whether they're free and clear or they have a mortgage.
I'm interested in that.
Yeah, that's a
Alright,
super
okay.
cool. Okay. So this one, again, has 4 years from credit derogatory, but if it's between 2 and 4, we'll review it with some restrictions because now this is an investment property. Here's the 1 times 30 late, and they can't have a 30 late payment in the first 12 months. If they had a derogatory in the second year to the 4th, again, we would look at it overall, see how strong the customer is, and still we'll look at doing that loan.
Average interest rate?
I'm sorry,
Average interest rate? on that one?
what interest rate?
Yeah.
Well, this one is 5 1/4. Because this is primary. This is going to be investment.
Mhm.
This one here is going to be about 6 1/4. It's not really that bad. Fixed 30 years, but they can also do interest only. So that's used too. What if that owner wants to buy an extra property, doesn't want to use tax returns, wants to simplify the process, and they have experience, they own other property, but they don't want to pay a lot on a mortgage payment to have a better return on that home to keep it 10 years, we can do interest only. So interest only, you're going to save even much more on that mortgage payment. And this one starts at 640. Look how funny. It's even less than your other traditional programs.
Mhm.
So why? Because they truly believe on the investor who does have experience. If that investor has a credit score and has good credit that doesn't have any lates in the 12 months, that's a good, that's an experienced individual. Okay, this one does have a 3-year penalty. So keep in mind, because we are really doing very thin type of loan, very little limitation on what we do, this one has a 3-year penalty. So the first 3 years, the investor cannot sell a home without having a little bit of a penalty.
How many minimum properties do they have to have?
This one here can have on the homes up to 20.
No, but I mean, let's say to consider an investor at least one property.
Yeah, at least one.
At least
In fact, it's a very good question. In fact, let's say they only had one and they sold it 4 months ago. No, there are, besides their primary, an investment. They're always their primary, but their investment, and they only one, and they sold it 4 months ago. We still, if they prove that they had owned that property, we will still do that program, even if at the moment they don't have any investment properties. So yes, as long as we can prove they had investment experience in a reasonable time, not 20 years ago, in a reasonable time, we will be able to still do that loan. Any questions?
So what document would you need for that? Just the credit, run the credit?
We will run the credit, correct? We will run the credit. We would do an appraisal. And,
Appraisal of what? I have to have a property already on mine.
oh, yeah. We have to have a property so we can see what the value of that home is. So we can, once we do the appraisal, we can do a pre-approval and use a hypothetical between us, of course. But the way it would work is the initial process would be, once I do the application, turns into a real deal, we will order an appraisal with the rental analysis to make sure that rent will cover 75% of, this. Right. And so if it does, that's what we need. Just proof that they have the funds, credit report, and the appraisal. Right? That easy. So I'm also going to send you that little cheat sheet. And I'm also going to send you this at a glance. Don't want to send you a lot of paperwork because I know we then, put it aside, and I want to be it's so easy to look at that I don't want you guys to have something that's so much, because we don't have time to then say, well, I'm going to go through 700 pages. But just a little glance. This is the Smart Self, which is the bank statement program. I just sent you a little draft here. So you have a little bit of everything up to 3 million, up to 500 cash out, ratios go up to 50, a bank statement program, the residential income requirement, which means that not the back ratio, this is the back ratio. This will be the mortgage. Their home cannot be more than 43%, which is huge. Normally it's 38. So we're good there. And just keep in mind these smart self programs, which are bank statement, the loan amounts have to start at 100.
Yeah, I don't know if you answered before that question, but that several of the self-employed have LLCs or incorporations.
Yes, good question.
So
Wow.
the bank statement should be from the personal or the LLC or the corporation.
Yeah, it depends on what program you're using.
Let's say the primary.
If you're using,
The middle one,
the middle,
primary
Self-Smart, right? If you're using Self-Smart, we need the bank, and we can use either or both. You can use 12 months business and 12 months personal. Some people give me 12 months of the bank statement of their business. I add it if it's enough, we're good. Or they might say, you know what, I want also you to add my personal. And then we add that as well to give them more income. If that answers your question. Yeah. Or we can just do either or. Some people have a Schedule C and use their personal. They don't really have a business bank account. And we can use that as well. And then here's just another glance of the Smart Self eligible matrix. And you can tell here, if their credit score goes up to 740, we can actually go, that's when we can go up to 2 million and 90%. Keep in mind, right, that these are all the charts of where the customer will need to be as far as the credit score and how much we lend on a purchase up to 4 units. Okay. So I'm just gonna send you this as a little draft so you can see where we're at. The majority of these customers that are Smart Self, pretty good credit. They usually have strong credit. It's just that they, don't like to report it. They get creative, and that's okay. You know what? It is what it is. But at least we want to make sure they have something to, to fall back on. So these are 3 strong programs that we're doing now, and I'm going to send it to you guys. If you have any other questions. Any questions? If not, I think someone was typing. Okay, all right. So if you have any questions or want me to figure out if your customer fits one of these molds, then just let me know. And then that way we can start looking at these. Again, I did a few of these here in 2019 and in 18 when I started because it was super popular. In fact, one of them was for Nancy's sister, I think. So anyway, yeah, so we did a few and yeah, well, thank you so much. I'm gonna try to do a little powwow like this again every Tuesday, just 30 minutes. I don't want to keep your time, but a little bit of snapshots of different things that will help you and it helps you, have something else in the market to talk about or to be ahead because you hear a lot. And I want you guys to feel comfortable that you've had some type of a feedback as things come back. Okay, any other questions? No? Thank you.
Thank you. Thank you, guys. I'm gonna record this too, so, send it out. If anyone wants to just ask. Thank you, guys.
Thank you. So, yeah, I'm gonna do that. Isabel.
Okay.
I'm gonna do it.